Hello everyone, it's Monday, September 7th, it's Labor Day, and although the markets are closed, I just wanted to bring a few points to your attention since we had the non-farm payroll last Friday, and also because we had two really big sell-off days, and in case any of you are concerned, I'd like to help alleviate those concerns right now. So as you know, this is our Monday Market Mashup. We try to cover the things that are happening in the first day of the market. Of course, it's not open today, but a lot happened on Thursday and Friday, and I want to prepare you for Thursday night. So you can always subscribe to us. We recommend that so that you get our updates whenever we go live, either Monday or Thursday, or sometimes other times, non-Monday and Thursdays, because as election season gets really into the thick of things here, we may find the need or the desire to do that. Also follow us on Twitter. Had a really good non-farm payroll. This is the monthly employment report that comes out the first Friday of every month, almost always the first Friday. There are some exceptions, but it did this month. And I can't obviously report on that Thursday night when I do my regular CB3 Live, so I'm doing it now. Unemployment rate dropped to 8.4. Now, obviously, that is a high number, but remember, it was pushing 20% in the height of this. I expect that you'll see this drop probably further to 7.25, maybe 7.5 for the October report. For the September report, probably, actually that will come out on October or whatever that first Friday is. And I think that's going to be a good number, and that's going to be something that encourages everybody too. So notable gains, look in yellow here, in the retail trade, in professional and business services, and in leisure and hospitality. So there is some hiring coming in those very, very beaten down industry groups, and I find that very encouraging. So if you look back at August, this was the best August in the S&P since 1986. So a 7% return, you see it there in light blue, was the best return since 1986. Look at the Dow, the 7.6 return in the Dow. And remember, I mentioned this last Thursday, the Dow and the S&P are catching up to the NASDAQ. Not a lot, but they are doing some. But this is the best August since 1929. August is not a strong month. It's usually the third worst month of the year. September, our current month, is usually the worst. So these are very encouraging data from last week. For the year, the NASDAQ up 26.1, the S&P 6.1, the Dow is now negative again. When I talked to you Thursday, it was still higher, but down just a little bit, and the Russell, obviously in single digits, better than being down 30 something like it was in March, but there's still a huge gulf between the NASDAQ and the Russell. So we're still up 28.8% in CG. If you're one of my clients, you have a CG account. 100% of CB3 Financial Group clients have a CG, Capital Growth account. And the reason we're beating the markets is because we're picking winners. We're staying away from sectors that are underperforming, and we're investing in sectors that are performing well. So the shakeout in the high-flying stocks surprised a lot of people. Didn't really surprise me. I could see that the VIX was rising at the same time as the market, and whenever the fear index is rising, it means the person is driving 75 miles an hour in their car, but with their foot on the brake, which seems kind of dumb. But that's what happens when the market is sensing that there's an overbought situation. And you might say, well, so why not just get out the day before and then get back in, 3 or 4 days later? We could. If we could time it that well every time, we'd be glad to do that. But there are plenty of times when the VIX has crept up, when the S&P's been rising, and the S&P just keeps rising. So best to stay the course with a very well-defined trading plan. So the thing of note, though, is that this recent decline, Thursday and Friday, is the most intense since back in March. But I still think we're going to be okay. If you look at this chart, this is 20 years in the S&P. You have to look really, really careful at the right-hand side. See that tiny little red bar there? Lean in on your monitors, guys. And I just highlighted it there in yellow for you. That's the month of September. 4 trading days, Tuesday through Friday, September 1st through 4th. And that's all that's happened. So this is recency bias coming into play when people get all concerned when they see the market selling off. Look in the grand scheme of things. Go back to the beginning of the bull market, or the end of the bear market, I should say, on March 9th, 2009. You can see it there at the very bottom. Look at the move we've had. This little correction of 4 days, not that big a deal, okay? We'll see what happens this next week, but as of right now, don't let recency bias concern you, okay? Again, just reminding you, this is how we're doing. It's been a pretty good year so far. We're hoping to continue to bring those results to you. I've got a great guest on Thursday night, also a portfolio manager and a researcher, and I think you guys are going to really enjoy it, so be sure to tune into that. We will cover, as we always do, the U.S. economy and the 2020 election season. It's just going to be a great time. Continue to ask you to fill out the subscribe button here on YouTube, and also to follow us on Twitter. We're also on Facebook and LinkedIn. We still have, I don't know, half a dozen people or so on LinkedIn that find us there. So appreciate you being with us here. It is Monday, Labor Day, September 7th, and we will see you Thursday night. From COVID to clarity, this is your Monday market mashup of CB3 Live.